let's see a very simple problem in dissolution. X, Y and Z are partners, share profit in the ratio of 3:2:1. On 31st/12/2021, their balance sheet was as follows. Creditors 12,000 rupees, general reserve 3,000, capital X 20,000, Y 15,000, Z 10,000. The total of the capital is 45,000. Machinery 25,000, stock 11,000, debtors 9,500, goodwill 13,000, cash 1,500. Total of the balance sheet is 60,000 rupees. Additional information. On the above date, the firm was dissolved. The assets except cash realized 60,000. The creditors were settled at rupees 11,000. Dissolution of expenses amounted to rupees 800. Give necessary journal entries. You are asked to prepare, you give necessary ledger account. Okay. You are asked to prepare the ledger account, necessary ledger account. Okay. What are the necessary ledger account? Realization account, partners capital account, then bank account. These are all the necessary ledger account in the case of dissolution. Let's see. This is the format for the realization account, a simple format. Okay. So here first we have to transfer the assets to realization account, book value. Realization account debtor to asset. Okay. The assets which are in the balance sheet should be transferred to realization account. Like that, immediately we have to, the next step we have to transfer the liabilities in the balance sheet to the realization account. Liabilities account debtor to realization account. For assets transferring, realization account debtor to assets. Then the next step, they realize that means they sold the asset. For that, we have to write bank here. Amount realized, that is assets realized amount should be entered here. Then they have to settle the liabilities. For that, the amount of settlement should be written here in the name of bank. Then the entry is realization account debtor to bank. Here the entry is bank or cash account debtor to realization. See, after transferring the assets and liabilities, we should not mention the assets name as well as a liabilities name. Okay. If we sell the assets, that should be written cash account debtor to realization account. If we settle the liabilities, we have to write, we have to pass journal entry realization account debtor to bank because we close the account. Okay. We close the account and so the assets name should not be written here. Okay. Then bank. To bank. This is for realization expenses. This is for settlement of liabilities. This is for assets realized. Okay. See, this is a very simple realization account. You may get either realization profit or realization loss. You may get either realization or realization profit or loss. That should be transferred to partners capital account in the profit sharing ratio. Okay. So this is the simple realization account format. First we have to transfer the assets. Then we have to transfer the liabilities to the realization account. Then we realize the assets. For that, bank account should be given coming under the credit side. Then we settle the liabilities. Bank account should come under the debit side of the realization account. And then realize for the realization expenses, bank account should come under the realization account debit side. Then we may get either profit or loss. So whether the firm gets profit or a loss, that should be transferred for partners capital account in the profit sharing ratio. This is the question number 1, realization account. Solution. Machinery. We transfer. The first step, we transfer all the assets to the realization account. Okay. Machinery 25,000. Stock 11,000. Debtors 9,500. Goodwill in the book, that also should be transferred here because in the dissolution the goodwill is considered as an asset. Okay. No special treatment is required. Like that, we have to transfer the liability. We have only, in the book, only one liability, that is creditors, that has to be transferred. So, by creditors 60,000. So, we have transferred all the assets and liabilities to the realization account. Then, the next step, we have to see for how much the assets are realized. That should be transferred here. By bank, assets realized. The assets are sold at the value of rupees 12,000. Then they have to settle the creditors, liabilities. Here, to bank, creditors settlement, 11,500. Then they have to bear the expenses for this realization. That should come here, to bank, expenses, 800. So, first we have to transfer all the assets. Second, we have to transfer the liability. Third step, we have to realize the assets. The result assets realized amount should be written here, should be entered here. Then fourth step, they have to settle the creditors. That should come under the debit side. Then for expenses, the amount should be entered here. So after finishing all this process, we have to find out the total. This is a very simple problem, and so it is very easy to calculate realization, profit or loss, capital account and bank. Okay, the total of the credit side is 72,000, debit side is 70,800. So in this problem, the firm earns a profit to the extent of 1,200 rupees. That 1,200 rupees should be shared between partners in the ratio of 3:2:1. That is the profit sharing ratio. 1,200 into 3 by 6 is 600. 1,200 into 2 by 6 is 400. 1,200 into 1 by 6 is 200. So, this is the style to prepare realization account. Next step, we have to prepare capital account. Balance. A 20,000, B 15,000, C 10,000. General reserve. Total general reserve is 3,000. So 3,000, 3:2:1. If we divide 3,000 by 6, we will get 500. 500 into 3, 1,500. 500 into 2, 1,000. 500 into 1, 500. So the general reserve, share of general reserve to A is 1,500. B gets 1,000 rupees and C gets 500. Revaluation profit, just now we calculated, that is 600, 400, 200. Then the total of the credit side of capital account for A is 22,100, B is 16,400, C is 10,700. Under the credits, the debit side, there is no amount in the capital account. So, the balance of A's capital account is 22,100, B's capital account is 16,400, C's capital account is 10,700. This means the firm has to settle A to rupees 22,600, B's settlement amount is 16,400, C's settlement amount should be 10,700. This is the amount due to them. Okay, 22,100 is due for A, 16,400 is due for B, 10,700 is due for C. In this style, we have to prepare the capital account. Next step, we have to prepare bank account. Balance in the balance sheet is 1,500. Assets realized is 60,000. Then the firm settled creditors to the extent of 11,500. Expenses incurred for this dissolution process is 800. Then A's capital account, that is A's capital account debtor to bank account, that is A is paid 22,100, B is settled 16,400, C is settled 10,700. So the total of the bank account is 61,500. It has 61,500. It settled creditors, expenses and the capital account of the partners. In this way, we have to prepare the realization account, capital account and bank account of the partners. This is a very simple problem. In the next class, I will take a little bit of complex problem. Question number 2, dissolution. The following is the balance sheet of Ram and Lakshman on 31st 12/2021. Sundry creditors 1,14,000. Mrs. Ram's loan 30,000. Lakshman loan 45,000. Reserve fund 15,000. Ram capital 30,000. Lakshman capital 24,000. Then go to the asset side. Cash at bank 34,500. Stock in trade 18,000. Debtors 60,000. Less provision 3,000. Outer column 57,000. Furniture 12,000. Plant 84,000. Investment 30,000. P&L account 22,500. So the total of the balance sheet is 2,58,000. Additional information. The firm was dissolved on 31st 12/21 and the following was the result. Ram took over the investment at an agreed value of rupees 24,000 and agreed to pay off the loan to Mrs. Ram. Assets realized were as follows. Stock 15,000, debtors 55,500, furniture 13,500, plant 75,000. Expenses of realization 3,300. Sundry creditors were paid off less 2.5% discount. Ram and Lakshman shared profit in the ratio of 3:2. Prepare realization account, capital account and bank account. So in this case, the company at the time of dissolution, it closes its book and transfer all the assets except cash to the realization account and all the liabilities to the realization account at book value. Then it has to sell the assets. Then the fourth step, the liabilities of the firm has to be settled. Okay. Then the expenses have to be met by the firm. But then they have to transfer the accumulated profit and losses to the partner's capital account. If they have any current account, that also has to be closed. And then they have to finally touch the capital account and they settle the partners. Okay. This is the procedure of the dissolution. Let's see how to do the problem. There are two partners here. One is Ram, another one is Lakshman. Here Ram took over the investment. He has taken over the investment asset. Okay. Then he agreed to pay off the loan of Mrs. Ram. Okay. So he takes the asset and he agrees to pay off, settle the Mrs. Ram. Okay. Then these are all the assets realized because book value we may not get sometimes, many times we may not get the same book value when we sell the assets. Okay. It may be increased or decreased. Okay. So like that sundry creditors 2.5% discount they are agreeing, and so all those things we have to keep in our mind to prepare the realization account. Journal entries. Realization account debtor to sundry assets. Transfer all the assets except cash 2,04,000, 2,04,000. Then next step we have to transfer the liabilities. While transferring the debtors, we should not transfer the net amount. Suppose the debtor is 10,000 rupees. Provision for doubtful is 9,000. In the outer column, we have 9,000 rupees. We should not transfer this 9,000 rupees here. We should transfer only 10,000. But here we have to mention 1,000 rupees while transferring the liabilities. So here we transfer, the second step we transfer liabilities and provision. This is provision for doubtful debts. And so here we have to transfer the gross amount and the provision has to be transferred here. Okay. So creditors account data Provision for doubtful account debtor to realization 1,40,000, 3,000 and the total amount, the total liability is 1,17,000. Then Ram has taken over the investment at the value of 24,000. Okay. To that extent, his capital account should be debited. A firm, suppose the firm due to Ram is 50,000. He has taken over the investment at 24,000. So the balance amount only paid by the firm. It need not pay 50,000. Already asset is taken over by that particular partner. So the balance amount is 26,000. 26,000 only the firm has to pay Ram because he has taken over the asset. If the assets are taken over, the capital account of the partners should be debited. Next, bank account debtor to realization. Here we transfer the assets. For what purpose we transfer the assets? To sell. To selling purpose. The firm is going to sell the asset and so it transfer. Okay, here they sold the assets. Okay, in the coming classes we will see piecemeal distribution. Assets are not sold at once. It takes a long time. Okay, but here they sold. They realized the amount of 1,59,000. Okay, this 1,59,000 is used for settling the creditors, meeting the expenses, and settling the partners' loan account and the final settlement of the partners. Okay, so they realized out of sale rupees 1,59,000. First step they transfer the asset. Second step, they transfer the liabilities. Third step, if a partner takes any assets, his capital account is debited to the extent of the assets value. Then fourth step, the assets they are selling. They sold the assets. Then out of that money, they settle the creditors. For that, the entry is realization account debtor to bank. 1,11,150. Then they met the expenses. Realization is a big process. They are selling the assets, settling the liabilities and all. No, for selling the assets, they have to bear many expenses. Okay, they have to meet. So here all the expenses are met only by the amount, opening balance of cash as well as the assets realized. Okay, so they met first. They settled the creditors and then they met the expenses. For that, the entry is realization account debtor to bank. Then loss on realization. Here the firm faces losses. That whether the firm faces losses or profit, that should be transferred to partner's capital account in the profit sharing ratio. So Ram's capital account debtor, the Lakshman capital account debtor to realization, being the loss on realization transferred. Ram capital account is debited 11,070. Lakshman capital account debited 7,380. So the total loss is 18,450. Then next one, Mrs. Ram loan account debtor to Ram capital account 30,000. He agreed to pay his wife loan, discharge his wife loan, and so his wife, that is Mrs. Ram loan account, should be transferred to Ram's capital account because he agreed to discharge the loan. So the total loss is 18,450. The profit sharing ratio is 3:2. So the Ram's capital account debited 11,070 and the Lakshman capital account is debited 7,380. There is one more loan account in the balance sheet, that is Lakshman loan account. Lakshman loan account should be discharged. So the entry is Lakshman loan account data to bank account. 45,000, 45,000. Then reserve fund in the balance sheet. Reserve fund is 15,000 we have, that has to be distributed among the Ram and Lakshman in the ratio of 3:2. This is the profit sharing ratio. 15,000 divided by 5 into 3 is 9,000. 15,000 divided by 5 into 2 is 6,000. Then loss in the balance sheet, P&L account in the asset side. If the P&L account is in the asset side, that is loss, that has also to be transferred to partner's capital account. So Ram's capital account data, the total loss is 22,000, accumulated loss in the balance sheet is 22,500. That has to be transferred to capital account of the partners in profit sharing ratio. So Ram capital account debited 13,500, Lakshman capital account debited 9,000 rupees. So 22,500 divided by 5 into 3. 22,500 divided by 5 into 2. Okay. Then next final settlement. We have close all the accounts, all the assets transferred to realization account, all the liabilities transferred to realization account. Then they sold the assets, and then that amount is used to settle the creditors and the expenses. Then they settle the loan account of the partners, and the Mrs. Ram loan account is taken care by Mr. Ram, the partner, and so her loan account should be transferred to Ram's capital account. Then accumulated profit and accumulated losses is transferred to partner's capital account. So then finally we have to settle the, if in this problem there is no current account, if there is any current account, that also has to be transferred to partner's capital account. Okay. So in this problem there is no current account, and so straight away we can settle the capital. Okay. That is the final step in the realization account. Realization account. This first step, we have to transfer the asset. Okay, book value of the assets. So the total sundry assets is 2,04,000. Then we have to transfer the liabilities. This is the second step. Here we have transferred both creditors as well as provision. Liabilities and provisions should be transferred. Creditors 1,14,000, provision for debts 3,000. Then investment Ram has taken over. So here for that we have debited the Ram's capital account 24,000. Then fourth step, assets realized by bank 1,59,000. Then they have to settle, the firm has to settle the liabilities. Creditors allowed 2% discount. So instead of 1,14,000, they are given 1,11,150. This is the expenses 3,300. So the total of the debit side is 3,18,450. And so in this case, the firm faces losses. Okay. So losses to the extent of 18,450. That 18,450 loss should be transferred to partner's capital account in the ratio of 3:2. This is a profit sharing ratio. So if we transfer the total loss into Ram's capital account and Lakshman capital account in the ratio of 3:2, Ram capital account is 11,070 and Lakshman capital account is 7,380, debited to the extent of 11,070 and 7,380. This is the style to prepare realization account. You must know the basic concept. It is very simple. They transfer the assets, they transfer the liabilities, then they sold the assets, they settle the liabilities as well as the expenses. If they have any loan, the partner's loan, first they have, that has to, after settling the sundry creditors, partner's loan has to be settled. Then they will come to the final step. They have to settle the partners, okay, partners capital, okay. So this is the these are all the basic steps, okay. Then capital account. This is the balance. Ram 30,000, Lakshman 24,000. Reserve. Ram account, capital account is credited 9,000. Lakshman capital account is credited 6,000. This is accumulated loss. To P&L account 13,500, debited Ram's capital account 13,500, 9,000 rupees is debited the Lakshman capital account. From Lakshman capital account is debited 9,000 rupees. Ram's capital account is debited 13,500 because it is a loss. Then the realization. This is the asset investment taken over by the Ram. So 24,000 should be debited from the capital of Ram. Then this is the realization loss. Realization loss is debited here. Ram account is debited 11,070. Lakshman account is debited 7,380. This side Mrs. Ram loan account is transferred to Ram capital account because he has agreed to discharge the loan. Okay. Then we have to calculate the final settlement amount. Okay. The total of Ram capital account is 69,000. Lakshman capital account is 30,000. Here we have 39,000 and 69,000, 30,000 total. Then if we deduct, we will get the balancing figure of Ram capital account is 20,430. The balancing figure of Lakshman capital account is 13,620. This is the amount which has to be settled by the firm. The firm settled the capital of the Ram and Lakshman by way of paying 20,430 is due to him. So the firm settled 20,430 and the firm settled here for Lakshman 13,620. In this trial, we have to prepare the capital account of the partner. This is the final settlement of partners. Okay. For the settlement purpose, we prepare capital account. Then bank account. Realization. Creditors. Creditors is settled 1,11,150. Opening balance is 34,500. Assets realized is 1,59,000. The firm has 1,93,500. Out of that 1,93,500, the creditors are settled 1,11,150. Expenses met by the firm is 3,300. Lakshman loan is settled 45,000. Then the settlement of Ram is 20,430 and Lakshman is paid 13,620. So the bank account is tallied. Okay. The bank account should be tallied in the case of dissolution, normal dissolution.